Yeah, so there was an interesting report came out by our peers in Singapore, Cento. So I think they raised it publicly, and they showed in terms of the most liquid venture capital ecosystem in terms of exits is actually Malaysia compared to Singapore.
Really?
And
How do they measure that?
So I think there's a lot of exits, small exits,
Yep.
but I think it's not big exits.
I see.
Yeah. The problem with that, I mean, they managed to get information through their own ways. But I think for Malaysia I do believe that because we have a lot of exits. I give you a case in point. Facebook, fifth acquisition, M&A acquisition, was a Malaysian company.
No way.
No one knows.
Before we begin the podcast, have you gotten your free ebook? It's called the Build a Six-Figure Portfolio Guidebook. Now, inside it, we share with you the tips and tricks to bring your stock investing skills to the next level. The best part, it's only 10 pages long and it's totally free. Whether you're on Spotify or YouTube, the link to download is in the description, or you can go to www.firl.co/FREE or www.firl.co/free. Hey guys, welcome back to the podcast. Today's guest is going to be a bit left field, right? It's probably our first guest that is going to share with us about the world of venture capital, specifically in the Malaysian context. He'll share about his experiences, the do's and don'ts, and a little bit about the future. And today I have with me a very special guest. That very special guest, I have Omar, who is the principal of Artem Ventures. Welcome.
Thank you. Thank you for having me.
When was have you done a podcast like that before?
No, I haven't done a podcast. Yeah, you guys are the first. I do panel speaking, right. Conference, but I never saw.
Okay, thanks for letting us break that virginity for you.
Yeah.
So I think let's start off with what your life was like before venture capital. I think most kids, when they're growing up, they don't say that I want to grow up to be a venture capitalist.
Yeah.
Astronaut, bus driver maybe, but not venture capitalist, right?
Yeah.
So maybe share a little bit about your life and how you got interested into money investing and eventually venture capital.
So I would say my first, I probably started back in university, in Australia, Queensland University of Technology. So I think one of the subjects that I need to do was to develop a paper about sustainable fishing or sustainable investment or sustainable business, right, along that line. So I was doing the paper, and then there was a question about how are you going to raise money for it, right? So then I dive into all this other thing, banks and whatnot, and I saw venture capital. So venture capital predominantly was still early in Australia back then, and there's a lot of conversation and a lot of activities, mostly in the Europe and the US. So I dive into it, and I was like, oh, this is the good potential avenue for my paper, right? But I think what I understand it further, my perspective is how is helping business to start off, right? I think the intention is the thing that I like about it, how it helped business to start off, especially innovative ideas. So my background is economics, right? So when I look into the environmental side of it, there's a lot of opportunity in terms of helping and investing into the more sustainable or environmental friendly businesses, right? So I just started to look into venture capital back then. Moving forward, when I came back, so I was working with the Association of Islamic Banks, Malaysia. And during that time, there was a paper, a framework that was supposed to be launched by the governor to develop a platform called Investment Account Platform.
Investment and what? Sorry?
Account Platform.
Investment Account Platform.
Yeah.
Okay.
So Investment Account Platform basically is a platform owned by a few Islamic banks, started by Negara. I mean, the idea, the framework and whatnot, and owned by the Islamic banks. Basically, they will bring the deals onto the platform by the banks themselves. and then people like us have the opportunity to invest in them. So I saw this as a great opportunity to get people more inclusive into how investing in a sophisticated product or deals that's only being seen by the banks, right? So focusing on investment bank, but it's focused on Islamic investment bank, right? Yeah. So I don't know if I said too long.
It's fine. I think I would love to go into the Islamic finance thing, but I think maybe we stick to VCs.
Can.
So I want to ask a little bit later on about, because you were ex-Penjana Capital as well, and then Artem Ventures. But before that, how you describe to a complete newbie, right? What exactly is VC?
So I think historically, maybe I just look at some of my notes. VC started, you could say it's a subset of private equity. Right. So it started after World War II in the US.
Oh, really? Wow.
Yeah. So the first one people would argue is, and probably agree with, is called the American Research and Development Corporation, called ARDC.
Ooh.
Back in the days. Basically, they're investing a lot of technology companies who are very high risk, no track record, those things, right? So it started way back in after World War II. So from there, the rest is history, right? So from there, I think there's a lot of company that comes up, Sequoia, Kleiner Perkins, all these other big Excel, so all these big VCs coming up from the US, right? And then it spill over to Europe, and then eventually it arrived in Southeast Asia or Asia. China has a different historical journey, but let's focus on Southeast Asia. What is VC, right? So for Southeast Asia and for Malaysia specifically, is a VC, technically a firm by finance professional, investment professional, who raise money from sophisticated investor or institutional investor and to invest in, you could say, high risk businesses, right? They're different than private equity because they do not take the majority shares of the company.
Right.
Usually 10 up to 30%, or maybe a bit more depending on the deal, but usually that would be the usual equity position, right? So that's a key difference. Another key difference is, other than private equity involved with management, day-to-day businesses, mostly. But for venture capital, you do not. They work really close with the CEOs or the founder of the company, advising them, helping them, and scaling, helping scaling the business. And that's I would say the second biggest second differentiation factor. So the third differentiation factor is, I think, is easy to answer, is the investment size.
Usually give us a sense of the size difference.
So early stage company, you can, in Malaysia, you can look into from 500K to 5 million ringgit for early stage company. That's equivalent to around 5 to 20% equity, right? The valuation is really case to case, but you would say that would be the rough figure you can see in the market right now. So that's one. I think that the second bit is the approach. The approach is a bit different. Some of VCs have multi-stage funds, means they can invest across every business life cycle or startup life cycle, from seed, Series A, Series B, Series C, and Series D onwards. Some VC has thematic. They're still multi-stage fund, but they focus on fintech, focus on insurtech, or focus on agriculture, or they focus on B2B business and whatnot. So it depends on the VC's preference and investment thesis, I would say. So going back to us, Artem Ventures, currently we have one fund called Team Ventures.
Sorry, what ventures?
Team Ventures, TIM.
TIM, okay.
Yeah, so Team Ventures. So our LPs, the biggest one is FWD, the insurance company. So we invest in early stage businesses, focusing a lot on seed and focusing in finance, insurance, and something along that have impact for underserved communities, right? So our fund is kind of like an impact fund. So every time we invest, there's some sort of impact the company is doing.
So I do want to get back to this impact discussion. I think it's a very interesting one, but just roll the time back a little bit.
Yeah.
You apply your trade at Penjana Capital, and VCs and Ps is not new to you before starting Artem Ventures. It's not like it's a new thing. how you describe your journey before starting Artem Ventures in terms of VCs and all that?
Yeah. So maybe I take a step where I was doing the investment platform, just a bit of color and the context behind my journey. So helping Banagara with the platform and getting all the relevant banks to me, I understand the intention of it to make funding more inclusive, right? To make funding more inclusive to the public and whatnot, right? So moving forward, after that, I joined Equity Crowdfunding Crowdo. So they won the few license, by SC back then, right? So I was one of the country director or the director of Malaysia. So I launched the first deal back in 2015. We probably raised the biggest one in South Asia back then. And I kind of like getting more involvement with venture capital after that. The reason why I get involved is because we do share deals with them.
What deals, sorry?
Deals, the investment deals for Equity Crowdfunding. We do share deals with them and they share it with us. And eventually we got funded by a VC, right? So we got funded by Gobi Partners back then. So my involvement in VC was, spike up during that period of time. And after that, I joined MDEC, was doing a lot of funding ecosystem development program. And during that period, and I got an offer to join Penjana Capital during the lockdown. So it was probably in the middle of 2020, year 2020, right? So Penjana Capital basically was an idea to stimulate economy through investment by venture funds. So basically, their role is to invest as an LP, and then the VC will invest to startups, SMEs, and whatnot, right? So during that period, I think the first task was setting up a company. Second, it was to launch a RFP, and the third one was to evaluate the tenders, basically. Right?
I really want to move on to the philosophy of Artem and all that, but if there's one thing that you learn from MDEC, Penjana, what would you say that would be the big learning lesson?
I think the big learning lesson for us is we have to build trust.
Okay. You're talking about with the founders or with the LPs or
everyone?
Everyone. Okay.
Everyone. I mean, from the LPs, from the founders, from the VC, trust is important. Trust is the currency of business.
Yeah.
Right? So the thing about trust is, especially VC, they're really new. I'm not saying it's a deficit. It's just so new, people do not understand.
That's right.
That's number one. And number two, and it's not just from the LP side, even from the startup side, they just want to understand further about VC. They don't know, because there's only few in the market in Malaysia.
That's right.
Right. So you need to develop those trust because, one thing, LP is giving their money to you to manage. Another one on the other side, startup giving their shares to you for you to,
your analysts and all that as well.
Exactly, right? So you're building a lot of trust. And the reason why there's requirement a lot of trust, because there's lack of data or information out there. There's not, I could say transparency. There's a lack of transparency on there because such a small industry for now.
Yes. But would you say that VC is maybe only 15 years old in Malaysia?
Okay, so I think MathCap, if you look historically, they started back in 2004.
19 years.
Yeah, so they started with the first government VC, I would say. And I think they probably started back then, but I don't think it was that popular. Khazanah has invested few venture fund, but not in Malaysia, but outside in Malaysia. I think it's few in Malaysia as well. But I think that when it gets really popular, probably after 2013, 2014, where there's a huge interest in startups in general, where you can see a lot of exits, IPOs in other markets about startup investing and whatnot, right? So from there was a huge interest, and then you can see a lot of government going into it. Yeah.
You touch a bit on the evolution on the Malaysian market, right? I think when people hear the word VCs, those with some cursory knowledge of the environment, they think of sort of swashbuckling, high risk, high reward kind of situation. And you would never associate that sort of behavior with the Malaysian capital markets, especially since 1997, right? how would you describe the Malaysian environment for VCs? What's unique, not so good, and good about the Malaysian market your experience so far?
Yeah, so there was an interesting report came out by our peers in Singapore, Cento. So they're Cento, CNTO.
Okay.
So I think they raised it publicly, and they showed in terms of the most liquid venture capital ecosystem in terms of exits is actually Malaysia compared to Singapore.
Really?
And
how do they measure that?
So I think there's a lot of exits, small exits.
Yeah.
But I think it's not big exits.
I see.
Yeah. The problem with that, I mean, they meant to get information through their own ways. But I think for Malaysia I do believe that because we have a lot of exits. I give you a case in point. Facebook, fifth acquisition, M&A acquisition, was a Malaysian company.
No way.
No one knows.
Whoa.
If you Google Wikipedia right now, it's the number 5. It's from Wangsa Maju.
From Wangsa Maju?
Wangsa Maju. It says that Wangsa Maju, Malaysia.
Wait, what? Oh, they
yeah,
doing?
You can Google it.
Yeah, right.
Yeah, so there's a lot of these activities that we don't know. I mean, you only found out after a while, these things, right? Through talking to people and whatnot. But we do have a lot of small exits.
Interesting,
yeah. Yeah. And number 2, I think I would say in terms of why Malaysia is very interesting is B2B business. And most of the business that exits has B2B business and not B2C. I mean, it reflects of our small market, right?
Yeah.
In terms of population.
We only have like 30 million. How B2C, there's a certain limit, right?
Yeah. So if you look deeply into Cento, I think there's mostly into it will be B2B business exit. So we technically still number 1. The top
in the region.
In terms of exits, but not in terms of the exit amount.
Size, yeah.
Right now probably Grab and Bukalapak probably have the biggest amount, but in terms of like the
I like to think that we should claim Grab, but that's a separate discussion.
That'll be a separate discussion.
Yeah.
But I would say number 1, I would say, and I think the second part that we're good. I think I mentioned about B2B business. We're very good at it. Really, very good at it. And I think the third part that Malaysia is very unique is because I think generally we are the probably the biggest exporters of talent in Southeast Asia.
Sadly.
Yeah, sadly. And that's a really unique proposition for venture capitalists, right? And also VCs looking into Malaysia as a talent hub, growing out and whatnot, right? So yeah, I think that's the 3 things that I would say very special about Malaysia. For VC, in terms of as a VC, what is it special? As a VC, I think we live in a really great time right now. I would say, yeah.
As a Malaysian VC,
after 2022 or 2022 onwards. Number 1, I think SE is supporting us, or Securities Commission is supporting us, or the government is supporting us really, really well. The reason with that, we have a tax incentive for corporates to invest in venture funds or directly into startups.
It's
tax deduction from their tax. So they can use up to 20 million of their tax. They can claim it year 3.
Wow.
To invest directly into funds or startups.
Right.
That's 1. Number 2, I would say also the government is very supportive of helping new VCs. I think I can be testament to it because I was at Penjana Capital. Majority of the Penjana Capital recipients are new VCs, or first time, who actually raising the first time. Yeah. So the timing is best for VCs like us and also entrepreneurs.
Actually, I wanted to get right into that. Thanks for bringing that up. You described a little bit about the VC environment, but the key component in this is, and the thing that makes VC relevant in the first place, are the entrepreneurs, right?
Right.
And what is your gauge on the current entrepreneurship scene in Malaysia? Because we hear all the time, negative news sells, right? Like brain drain, or companies doing bad, economy is down, ringgit this, ringgit that, right? But what are you seeing on the ground when it comes to new founders and the entire economy? Yeah.
I think let's go back to the credit crunch, 2008, sorry.
Yes, okay.
After 2008, there was a spike in technology, startup and whatnot. There was a spike in in investing as well. So I'm expecting the same thing, and I can see it on the ground, right? The entrepreneurs we have today, has been resilient and whatnot, are probably the most attractive companies right now. We has limited legacy. So the reason why I say limited legacy, a lot of companies in other countries who are VC backed have a lot of legacies. Means prior to 2020, they were raising so much big round, investment valuation very high, which they probably have difficulties raising right now. So going back to Malaysia, I can see on the ground we have all these new and or serial entrepreneurs coming out, right? So I can see a lot of coming from Penang, Kuala Lumpur, and of course a bit from Johor.
Give us a sense of the numbers, like
numbers.
How many of these deals are you seeing every day popping up on your table?
Up to date, we have viewed around 200 companies.
And this is in a span of less than 6 months.
So for Artem Ventures, probably around 12 months, I would say.
200 in 12.
Yeah.
That's crazy.
And then we invested around 8. By August, we have 13, hopefully.
Interesting.
So we started deploying in December last year. And by August, we probably have 13 companies.
Very interesting. So not all is doom and gloom, I assume.
No. So I think the conversion is very low for any country in the world, any market, in terms of, company that you see and convert it into investment. Yeah.
So we go now, I think it's a good way to talk about Artem, right? And what's the philosophy, right, of Artem? You mentioned earlier on this word, which is impact. So there's a social element, which is great because ESG and all that. But maybe describe Artem.
So Artem Ventures started with two guys, namely Saikid and also Zen, right? So they came from Captive Ventures, a CVC before that. So they've been investing early stage in the region for a while, and they can see the trends since 2014. So I think going back to that, because of those experience, we can see potentially what are the companies that could be the next big star. And for myself, I mean, with my experience in Bencana, I think I've vetted through, I can't remember how much, but I approved 47 investment in 2 years. So I can see a lot of trends in the region and whatnot. So our value proposition is looking into the founders at the end of the day. We work very closely with the founders. We help them with market access. We help them with getting their startup operation to be more institutionalized with the governance and whatnot. So governance is very high with us. A lot of VCs probably in other market would not.
Just want to make money.
Yeah, just want to make money. Put governance aside, but for us, we put high governance. So sometimes we impose a lot of things into the agreements. You need to have this and that, especially in terms of how do you spend your money, who's controlling the money. How do you decide what to do with this money? How do you decide where to spend? We will look into the governance structure behind it, right? The processes, procedures, and whatnot. And of course, we're a bit different in a way that although sometimes we're not the biggest equity stake in company, but we treat all our portfolios almost equally. Means if we go down really deep with them, we go down with the rest. Right. That's why taking most of our time, right? So we want to ensure that all these companies at least, be successful in some way.
Maybe you can share with me some notable investments that you've made, either personally or through other experiences. Whether you've exited, maybe you can share with me some of these experiences, success stories.
Success stories? That's a good question. I think I would say since my Artem journey is relatively new, I would say at Bencana, I saw a lot of valuation increase and, hence our performance increase as well. So we invested in this company, probably not name names, but an Indonesian-based company. We came in at the pre-money valuation of 900 million, around there, 950 million. I think less than a year, the company had a price round of $3 billion.
Whoa.
So we were like, wow, over the moon with that one.
It's a 3x in a year.
Yeah, right. So we had a few of those situations. We came in quite early, I would say Series B. Now there's already a D, E. Similar to another company, I think, a Malaysian unicorn as well, I think so we came in quite early. And now they probably value around 1.3, 1.2 billion or 1 billion, yeah.
You guys can go and guess which one is it?
Yeah, I mean, Malaysian unicorn, yeah. So I would say there was two interesting things, yeah, that happened.
So you talked about things like trends and all that. When you look at the portfolio of companies right now, what are the exposure, what industries or niches that you have right now?
With Artem Ventures, we focus on fintech and insurtech, and also companies that help financial inclusion and whatnot, right? So there's an impact angle. So most of the companies are evolve around that. I can say it right now. It's like Senang. I don't know if you know.
Senang Pay.
Yeah, no, Senang Insurtech.
Okay,
it's insurance. Okay. Yeah. So basically, they do embedded insurance. They help underserved community to get insured. Or another one I think is meaningful to talk about is Kapitani. Kapitani, people look, hey, isn't that agri-tech? It's technically agri-tech because they help farmers to adopt digital platform or to use to get them to be understanding in terms of how to be more more savvy in terms of running a business. So they also will help them in terms of getting financing for the small farmers, right? Yeah. So we like that type of business, and of course the impact behind it. And although the fintech or the insurtech is probably a small portion of their revenue, but the impact is very significant. It's something that we like. So
I see.
Another company that's probably worth mentioning, is probably new in the market, is cybersecurity insurance.
Ooh.
Yeah. So it's a company called Protostab. So
this is mainly for B2B, right?
Yeah, there's a B2B and B2B, but MSME. So anyone from MSMEs can adopt this to protect their, to be insured in cybersecurity, right? So usually I think it's offered to all these big, massive companies, but now there's an option, there's an opportunity for MSMEs to adopt this as well. Yeah.
Mm-hmm. Yeah. So, right. And, one of the challenges, apart from just identifying these trends, or actually before that, right, is there a reason why it's mainly finance, insurance related, or maybe a little bit I agree? Is that a conscious decision? It just so happens whatever pops up on your table are these companies.
Yeah. So let me share the context. Before we start the fund, we have to get LPs into the fund, right? When we get LPs into the fund, you get mandates as well. And so for us, it's like you're probably more aligned towards that. So we got a mandate to look into this area.
Mm-hmm.
The rationale is, the first one is because fintech is still the most lucrative business globally in terms of exits. Most of the multipliers of exits in the world are financially related, number one. Number two, although Malaysia, are not really known for underserved in banking, but we're still underserved in terms of banking services like banking finance, and insurance and whatnot. We're not really.
Yeah.
So there's the two main things that why I think we went into this thematic approach, is because we can see the problem statements as a market and we can see the opportunities.
And mainly the companies that you've invested in, are they mainly Malaysia based, or they have
all Malaysian based?
But do they have a regional footprint?
Eventually. So I think one of the key things that we look into, of course, eventually they will go out of Malaysia, because like I said, Malaysia is still relatively a small country or a small market. So eventually they have their plans. But all these companies that invested are pre-series A and below, means they're quite young and mostly are seed stage startups. Yeah.
So the typical investment size, is it in that 500K range that you all have been talking about?
We've done that, and we have a pre-A that we're looking around 3 million ringgit. Yeah.
So I want to then go into a bit of deal making right now, which is, how do you all plan out, from the amount you have to invest, and then how long do you expect to get a return? What are the internal, the IRRs for the company? If you are at liberty to share, of course.
Yeah. I think, well, I can share myself as a VC and so as an LP, right?
Yes.
So both of them need to align with this. So hopefully we have a return, hopefully more than 20% IRR, right? So hence we're trying to deploy as much as possible, probably during the first and the second year of the fund. So the fund life is probably around 10 years. So first year and the second year of the fund is really important for you to start deploying, right? So we want to chase that number, more than 20%, hopefully. So right now, a lot of companies that we look at based on our own internal valuation and ROIs, we can see a potential of all of them going beyond 8x at least, right?
In 10 years, yeah.
Yeah.
Sounds about right.
Yeah.
Doubling every 4 years, right?
Yeah. So we ensure that, look at the trends, we look at market comparables and whatnot. We can see that the possibilities are there. But the opportunity for us is because it's the stage that we're investing in. So that's why we can. You
have the runway.
You have the runway for it. I mean, if you're at Series B and C, you probably don't have that much runway for it, right? Because the maturity of the fund is probably faster, and the stage of a startup is probably at the later stage, right?
Yeah.
So for us, there is a lot of opportunity. There's a lot of assumptions behind it. Yeah.
Yeah. So, but then how about sizing, right? Like, how do you all decide? Okay, I'm going to put more here, put less here.
It depends really on the startup for us. It's like how much they're fundraising. A lot of companies that at this stage, after 2022, are morely fundamentally driven. So means they're not as aggressive as their peers prior 2020 in terms of spending money. So they're more conservatively and focused on fundamental growth. So hope, with our funding, we hope, we can see companies has a runway at least 12 months.
Okay.
Minimum 12 months, but we have a few more than that, actually. So we look into that. And the ticket size ranges from 500 to, like I said, 3 million. 3 million. Right. Yeah. At the moment. Yeah.
Okay.
Yeah.
And of course, one key aspect before you deal make is to actually get the deals, right? One big question. And I think this is also true for almost any part of the capital market is deal flow. I think a lot of people say like, it's not just like how well you analyze and whether you have a financial backer, but also what pops up on your table, right?
Yeah.
So maybe you can share with us some tips on how you can increase the deal flow and also the quality of the deal flows. Yeah.
So majority of VC deals globally, everyone knows is mainly for referrals.
Yes.
Right. Technically for referral, people that people you are in your network or whatnot. So for us, I think we have the opportunity and the benefit of, we work closely with 1337. It's an accelerator that focuses on pre-seed and seed startups. So we work closely with them to get deal flow, number one. Of course, the government, like I said, is very supporting. So they have Cradle Funds in Berhad. So Cradle Funds in Berhad basically invest in or provide grants to startup. They our deal flow as well. And I think the third part is probably most important. Like I said, referral. So how do you get referral? Is basically you need to widen up your network. Widen up to the network where you believe there's some sort of way that they probably get deal flow as well. Right? With another VC, probably like Khazanah, sometimes the deal is too small for them. They would recommend you to look into it first before they can take it in the next round and subsequent round, right? So it's all about network. So, but you need to be smart in terms of who you talk to, because sometimes you have mismatch about approach and thesis. So all these people who you connected with, you're friends with, or close allies with, is very important to get deal flow and to have that consistent deal flow. Yeah. We to date, I think we are doing like few deals, at least 3 deals we're doing with another VC together. Yeah. So that's how the referral network work, right? So it's been interesting journey. It's just two of us looking into the deal together. Yeah. So referral, very important to get a higher quality conversion or more quality companies, I would say. Referral is key. Yeah.
So, of course, then the other component, or the one big component of deal flow is also, of course, the quality of the founders, right? And as you mentioned earlier on, VCs are particularly concerned about the founders because they are not taking a majority stake where they can drive the business direction. How do you go about finding and saying that this founder is worth my money?
Yeah. So that's a very interesting, good question. The first one maybe to share, in other markets or any mature markets, a lot of founders driven from ex-management consultant, ex-banker, ex-this, ex-that. Which I think is good, is great, right? I mean, they know how to sell, they know how to manage their finances, they know how to fundraising, how to this. About Malaysia, I would say most of our founders are operators, man. Yes. The subject matter expert.
Get hands dirty. Yeah.
Hands dirty, which is a great thing. Which I think is a great opportunity because, a VC like me can value add through money and through our advisory. They can hire and they can find relative people that can value add into the company and, close the gap, right? A lot of founders in Malaysia that I see is very operational. They're not good at storytelling. Yeah, I think that's the biggest issue. The reason why I say that when you compare pitches and you compare conversation with Singaporean or not just Singapore, I mean foreigners or US and Europe, they're really good at storytelling.
Yeah,
really drill down into the context of their product, how it impacts their life, these things. Rather than, have a conversation, I'm just doing it because it makes money, kind of conversation, right? So it's something that we understand the pain points of our market, and it's something that we can value add. That's the beauty of it. So how we value add, we help them with
to pitch.
We train them, we get the relevant consultant to help them, and our partners hiring. So one of the key things that we help them, we're hiring, we vet through. We help them to filter and recommend, of course, because it's a very important part. Another thing is very important part that we do is we invest in seed, and this is the stage where it's still nimble. I mean, there's still opportunity to pivot. There's opportunity to do a lot of creative things. Rather than you're at the Series C, Series D, you're pretty much set. You just need to get in that one direction and just get it done. So our value towards that seed is a lot. It means we can do so many things. It really depends on the startup, right? So going back to the founders, I think Malaysian founders are great. They, I share you one example.
Yes,
I really love this story. This guy who I met it was funny because I met him in Singapore. He's a Malaysian. So I was at this VC event. I was at MDEC that time, and he was walking around aimlessly, looking at people, So I was like, "What's going on with this guy?" So I went up to him and talked to him. I said, "Hey, how are you?" And all this thing. I thought he was Singaporean, whatnot, and he's not. He's Malaysian. I said, "Oh, okay, me too." So he said he runs he sells cars, second-hand cars on his platform. I said, "Oh, very interesting." So we connected then, and moving forward, we catch up again in Malaysia. So he told me the story about his background, how he wasn't not doing well at school. I think he didn't finish school. I don't think he even had
high school.
Yeah,
wow.
I don't think he has a XPM. Okay. So he has issues communicating, writing and all these things. And I think that's why he was a bit frustrated when he was in Singapore because no VC wanted to talk to him.
So he couldn't speak English properly, is it?
Couldn't speak English properly and whatnot.
What was his preferred language?
Can't remember Cantonese or Mandarin. Yeah.
Okay.
Yeah. Yes, but he can. He understands. I communicate to him.
Eloquent.
Yeah, eloquent. Yeah. Right. So coming back to Malaysia, he told me that story and he showed me his traction, and I was like, "Wow, you're doing so well." Yeah. So there was a competitor of him, doing second-hand cars selling. I think you know about this one.
Mm-hmm.
Yeah, and I believe his traction was better that time.
Whoa.
And I was like, wow, very impressive. He even have excess cash of at least, I can't remember what, 3 million in the bank account just sitting there. He just said, don't know what to do. And I was like, wow, this is a great thing. But so he had a lot of issue in terms of, his shareholder cap table, we call it. It's quite messy. At that time, there's a lot of investors here and there. And also I helped him to restructure it and to ensure it's clean, to look clean. And then helped him, with so many things, right? Eventually, they got acquired by Caro. I think you know this company. So they got acquired by Caro, a Singapore-based company. And I think this Singapore-based company also got invested from Sinobi and PNB. So I think, so the thing about us, what was the lesson here is the thing, if you realize like the opportunity is always there. I mean, the right people are always there. You cannot use the same approach of other VCs around the world or other countries or mature markets approach and trying to identify a great founder, right? For me, whoever invested in that guy back then, who make the exit ready, probably multi-millionaire by now.
Yeah, one very interesting I heard from a lot of other founders, other VCs is that, at least the successful ones, they say that typically it's the founder who can't really present properly. Like he doesn't have he's very not very polished. Yeah. And it's maybe a bit nerdy, don't really know what he's trying to do, but he's kind of excited about his product or his service. Yeah. Then you listen, not too eloquent. Usually those are the guys that have a great product. And that's where I guess people like you come and say, okay, great product, keep at it. Let us change the language up a bit. And then suddenly it becomes more presentable for, future funders.
Exactly. So actually, I was not invested in that company. But I helped him. I got him.
Unfortunately,
I got him a CEO. Was my close friend who became the CEO of that company and run the operation and whatnot. He was good at presenting. He's very good at operations as well. So anyway, going back to this, sometimes for us, that's why we talk to almost every startup that reach out to us, because we don't want to miss the opportunity. And we'll take time to digest, because we've seen so many different businesses. Sometimes you can't really absorb all that immediately. Sometimes you have to take a step back and reflect, there could be an opportunity here. There could be synergies here, all this thing. Yeah. So it's a people business. And venture capital is really, really at early stages of people business. Right?
And typically those founders that you want to avoid, what are the characteristics? And let's talk about it.
I think that's a good question.
What are red flags, right? Like you get someone sends you an email or your deal flow comes in. Yeah. Then you're like, all right, team, tell me what's right or what's wrong. And the red flags, I guess.
I think the red flags for me is the motivation behind it. It really, really.
Why are you doing this?
Why are you doing this? Right? Because if the motivation is wrong, and I'm doing this for the sake because someone told me to, it's like, okay, so you're not really investing in your business, right? You just do it because someone's,
or maybe because I want a big exit, something.
Yeah, a big exit is okay, but I mean, sometimes a big exit is okay, but sometimes it needs to reflect on the motivation in terms of building the team, building the product, this thing. Sometimes there's a misalignment.
Yeah.
Yeah. Another thing is a lot of people thought, I mean, of course, the typical ones probably who has a bad track record in terms of fraud, whatever, definitely, we have to do.
You do a background check.
Yeah, we do a background check, so because our networks, we will ask around, what do you think of this, So the world is small, right, nowadays. So we'll do that thought check. I think the one that will be the typical one. But for me, I think, like I said, the motivation behind it, I really drive into or going into details on why they're doing it. Usually there's a lot of personal connection why they're doing it, right? Which is something that I really like, because investing is something personal to me as well. Yeah, that's right. Yeah. So if there's some sort of synergies there, then I would like, this is good.
What are straight no's?
Straight no's
is like, what are straight no's? Like when you hear
when they're doing too many things. That was straight no. I want to do this, and then I have this company here doing this, and tomorrow I'm going to do this and doing this. It's like so many things you want to do. So for me, I was straight no lah. Not in a way as a no. I would say, look, I think you should focus and come back
to me in a year.
you should focus and then come back. I think I've seen that a lot in Malaysia. I mean, there's a lot of cases.
Shiny object syndrome.
Yeah. What's it called?
Shiny object
Shiny
syndrome.
object syndrome. Yeah.
SOS.
Yeah, SOS.
Yeah.
So there's a lot of them. I met with you and yeah, that's for me that outright flag.
So how do you actually work with your team then, assessing these deals, right? How do you split up the work and maybe describe the dynamics? Because I think we've talked a lot about the things that happen outside the company, but maybe I want to get a sense of the insights right now. How does your team work?
Right. So I'll give you a scenario, right? Just say that we have an inbound, someone wrote an email to us at pitch@artem.vc, and it's a good deal, a good investment, and align with us, right? Just say it aligns with it. So me and my team, we have, with my analysts, we have a call with them for us to understand them better. And subsequently, what we do after that is I will work with analysts to build up a list of queries.
Queries.
Not even model it.
Okay,
just list of queries to fulfill certain questions that we or certain checklists that we have. So when we send, the company revert. If everything goes okay, we'll start asking about the data room.
The what? Sorry,
data room. So data room basically is like an online. I would say an online drive where they put all the relevant information about the company, about the financials, their legal, their governance, anything like audited accounts, management account, pitch deck, everything they throw in there. So every startup who've seen or met NVC who usually have a data room prepared. So usually when they're fundraising, they always update their data room.
What are some of these questions that you typically would have, that your analysts will give you, that you need to have them inside?
Yeah, I think a lot of questions that really sit on, if they have that traction, maybe we ask a lot on that. But mostly we're going to ask about the product and how they go into the market with it. What are strategy behind it? Fits and all that. How the strategy behind it, and who are the people driving it and whatnot, right? And of course, I think that will be heavy on product. If got historical traction, we'll scrutinize that as well, because that they have some sort of way that we can validate their valuation, right? If not, if there were little traction and whatnot, we'll look at market comparables, and we have our own internal ways to calculate it, right? So yeah, so after that data room will, we should either we have more questions and we have a call with them and meet up, or eventually we're okay, we can start with going to IC. All right, we're going to IC. And
IC is investment committee.
Investment committee, sorry. Right. So we're going to investment committee and share with our investment committee, and if they approve, we'll generate a term sheet, right? So generate term sheet, the company agrees, the founder agrees with us. We move on to the next stage of doing three things. The first one is financial due diligence. The second one is legal due diligence. And the third one is technology due diligence. That's very important. So we do all this, and FDD, financial due diligence, we conduct it internally ourselves. But the two other DDs, legal and also tech, we outsource to our partners, right? Once we have the report of all this due diligence, if everything okay, we can look into the agreement and then signing, and then of course invest.
And then the money.
Right?
Which stage of this process do most companies fail in your experience?
Oh, usually at the early on. Early on.
Yeah, in fact, will you say by the time they are like legal tech already, it's almost like almost close to done deal.
Yeah, 80% already, because really we negotiate down on the term sheet unless something changed lah.
Yeah.
Right. So yeah, usually at the first, before even the, sometime during the data room session or before that lah. Usually it doesn't go
fair
fast.
enough.
Yeah. There's a lot of reasons why, but usually at that stage. And unlikely we reject them when we are doing the agreements.
And what's it like in the discussion with the IC? Because the IC, some of them would be the principals, I'm guessing. Maybe board members.
Yeah.
yourself, and things like that? Usually,
So-
how does it go?
So the IC predominantly, we have external and internal. We have to be transparent, and of course, being we have to ensure everything that we do, and we have commentary and we have feedback from a partial person who haven't seen this deal before. So the conversation with ICs always revolve on educating them about the business, about the market, and what the opportunities to it. So I think it's typically just conversation about that, and for us to justify and for them to either approve or reject. So unusually, it's unlikely they will reject. I think the worst case that could happen is they probably ask more questions, or maybe I need more questions about this about their finances, about the people behind it, about the product, And
maybe. It's like it's a democratic way of doing things. Like every IC has to agree.
I think working with IC, because IC sometimes have an LP member there, is really, really important to get them to understand. One. Number two is for them to understand and provide feedback and give their commentary. Because sometimes when you look into an investment, you're in a tunnel vision where you don't see anything wrong with it, or you don't see any,
the sounding board,
blind
spot.
So blind spot. So our IC members or LP are who can provide us into sort of seeing the blind spots and other things that probably we didn't see. So IC is very important platform for any VCs.
And when you all were starting up Artem, how do you all decide on the type of IC members, and of course how many typically? 3, 4, 5?
Well, it depends. I mean, I think it goes to 4. I mean, you have to be 3 or 5, something around that line, right? So so maybe I have to ask the Artem guys. I mean Zen and Sakit about this. But maybe I talk about how Penjana, because I see an IC on that, right? So I see it on 4 ICs in Penjana. And as an IC member, my role is to evaluate the deal and also to reject or approve it, obviously, right? So in my IC Penjana Capital, in our IC Penjana Capital at that time, for each fund, there is a GP in there, or the partners, general partner from the VC, probably 1 or 2. Some of them even bring an independent to come in outside, to value add into the conversation and discussion and approval. So but from Penjana is only 1 seat, right? For the VC. Sometimes the VC invite 2 or 3, from internal, external. Yeah.
Very interesting. It's a slightly there are also governance within, right, the company. You not just expect governance of the companies you invest in, but also within as well.
Yeah. We put very, very high on governance. The reason why we want to ensure this, I mean, I think after 2022, the importance of governance just skyrocketed, right? I think if you look at a lot of Sequoia-backed deals, a lot of corporate issues and misinterpretation or misrepresentation and whatnot. Like you can say all these other things that's happening. I mean, so all the other LPs or LP will start imposing a lot of high governance, right? And also high governance doesn't mean more work. It's just more communication, transparency. Right. So I mean, we're very open to our IC members and our LPs, of course, how we work and how we and how the companies that we see, what the documents and things that we find, very open into it. Yeah.
I want to shift now from those in a way above you to now those under you. So that will be your team of analysts, perhaps, right? What's the talent situation like for analysts right now, for VCs? Is it abundant? Is it okay or lacking? And what makes a good analyst, I guess?
That's a very good question. Actually, when I was in Penjana, we created this program called Capital X. Basically, it was a program to help potentially future analysts or whoever wants to work in a VC to become analysts and to get them to at least a job after that, right? Why I created that? Because I think, why we created that? Because I think is during that period of time, a lot of all the VCs that we work with were struggling to hire people.
What were the struggles?
I think getting the right mindset, and
Okay.
because working in the VC is like working in any startup. Really you need to be hands-on. At the same time, you have to do multiple things. Time management is crucial, and being flexible and creative at the same time, because you have to digest so much information. So yeah, it's not a typical 9-to-5 job, I would say, with one specific task, right? So analysts actually, eventually they become a principal or partner in the future. So they literally have to do a lot of it, right?
Yeah.
From the investment side to the operation side. Investment side, of course, doing the number crunching, the valuation, the due diligence, and building up the investment memo. Operations, probably doing the transactions, for the
multi-skill.
Multi-skill. I mean, you can't have anyone with, who just, my job scope is this, I only learned that in the past. So it's very difficult, that's the thing. So a lot of talent that we can see in Malaysia that probably more near towards VCs, probably investment banking, but unfortunately, I think there's a mismatch on expectations, comparing to working in banks, probably, it's probably different in terms of the
banks a lot more structured.
Yeah, more structured. Right. Yeah, this one is like I said, like a startup. It's not that structured. You have to be.
Usually the team sizes are quite small. Usually, right? They're not more than 10, maybe.
Yeah. So probably one analyst looking at 3-4 deals at one time.
That's crazy.
Yeah.
And do you, in terms of, let's say if you do well, you get a good exit, I assume like your analysts also get a piece of the pie, right?
Yeah, they do. They do get a piece of pie. They do get part of the carry that we're getting it. So yeah, they will. So I think that's one of the things that we, every VC will give to the analysts and the team now, as part of retention.
It's retention and incentive. And will you say that in your experience, what's the churn like for the VC analyst world? Is it high or generally quite stable?
So there's not many VC, but I think the thing is, it's high because it's not because they're not good at their job, but once a good analyst is doing so well,
they go elsewhere.
They're really attractive for everyone else. I would say that. If you're coming up from a VC, if just say you're intern or your first job with VC, after a few years, you'll be so attractive. Like, because you can do investment banking, you can do a lot of things, even work with a startup, so your skill set kind of like covers everything, right? Almost everything.
Yeah.
So yeah, you'll be so lucrative after that. A lot of people, join Khazanah, this thing. So some ex-Khazanah comes to VC back again. So it's quite high, I would say, because the demand is there, high demand for these type of talents. It's not that many, I would say. So I think, to have a institution that would look into that talent would be very lucrative, I would say.
And what we say is the competitive landscape for VCs right now. I know there are not too many in Malaysia. You are one of them. Will you say there's only a handful you can count?
I think if you look, I think for me, this is my opinion on this. If you look at the SC website, there's a list of venture capital management company called VCMC. So I think there's quite a lot of them. But I think the most active ones are not. When I say active one, means they still have dry powder to invest. So I think after, with Pinjana Capital, so you have 8 there, and you have MAVCAP VCs. So you probably have around 20?
Yeah, not too many.
Around 20 VCs probably are very, very active, are quite active. But for our stage, seed, not many of them. A lot of them are later stage. Yeah.
Mm-hmm. Yeah. I think they want the certainty, right? That's why they go later.
Yeah, a lot of them probably had a fund before who want to create another one to follow.
Fair enough.
Yeah.
Okay, so let's talk about the environment now. So I think the big thing about just the entire capital market is liquidity, right? I think we are in I heard the word used, winter. Last week I interviewed actually a company that was involved in real estate transactions, and they are also feeling it, where they are trying to get funding. Not easy. Hurdle rates are higher. The bars for VCs to give the money has gotten higher for good reason. How are you dealing right now? What are your thoughts on this whole liquidity? I want to say crunch, but certainly there's a bit of dryness right now.
Yeah. I think after the slowdown from Tiger Global and SoftBank really give us signaling, to the market how the outlook in terms of late stage investing for VCs are, right? I think after 2022, it gets really deeper because after all the company that you didn't survive because of, for all the other reasons, right? So it is. So that's why we ensure like the startup, the company that we invested has like good runway for them. Not last time you can invest and start have like 8 months and say, okay, 8-month runway, you can raise money after that, easier. So
now what is the runway you guys are expecting?
North of 12 months. Yeah, north of 12 months. Yeah.
Wow.
Yeah, really.
So that's really the solution, right? Pick the right companies that can
withstand winter. Yeah, because I think we at the end the next round of financing or funding, it's not that many out there anymore.
Yeah.
That's one. I think another one is, I think if you look at that's on the VC side, even on the LP side right now, I think LP are being cautious because of the high interest rate. There's more lucrative investment asset class out there. Right?
T-bills.
Yeah. So
5%.
So I think VC really works well once we have a low interest rate environment. It is something that they will thrive better. I would say we have more money back then.
I guess you would say that if you are a VC that can do well in a high interest rate environment, you're really good.
Yeah,
VC,
you're a really good VC,
right? Because your hurdle rates are like a lot higher.
Hurdle rates are higher. I mean, you being more picky means more deals will come to you, more potentially good deals. So yeah, I mean, you're lucrative, right? For the interview of LPs, right? Attractive, right?
Yeah.
So yeah, I think I would say among the few.
So how do you, we're coming up towards the end, maybe the last 2 to 3 questions that I have, right? When you look back now, and I would say, it's still early days for you, right? In the VC space, right? Even though you've been there for maybe a decade or so what would you say has been the biggest learning lessons and also biggest challenges that you think you are continuing to face right now? Learnings and challenges.
Yeah. So I think the greatest learning for me is empathy, being more empathetic towards everyone. I mean, the ecosystem, something like, like my story about the entrepreneur that I'm in Singapore.
Don't rely on first impressions.
Don't rely on first impressions. I mean, you really need to really have your own principle, how you, to see value in people, right? I think that's the greatest learning. I mean, I've been, keep, reminding myself that to ensure that I don't miss opportunities, or at the same time, if I was the other person, I would like to be treated in that way anyway.
Yeah,
right.
That's right.
Sorry, what was the second question? Was it?
Challenges.
Oh yeah, challenges, right? I think the greatest challenge for us is, create more awareness about venture capital.
Yes.
How is the impact towards the ecosystem? How's the impact towards the startup founders? How do we impact towards the capital market? How does the impact towards our LP, and who are our stakeholders, right? I mean, there is this mixed belief about venture capital. There's a bit of stigma because they're like sharks, this thing, So
VCs, vulture capital.
Vulture capital, which I totally disagree with that.
But you have to admit though that I think the stereotype is not completely unfounded. There are people who are like that.
People who are like that.
Right.
I mean, there are definitely people who are like that. But for us, I think we try to be more transparent in how we do things, and how we approach and how we work with founders and not. So to ensure that you don't be labeled in that way. I think that was the biggest challenge, because I think the perception is there. I think the second one is to get more private money into the ecosystem. When I say private money, is private capital, from our local private corporates, private
billionaires.
billionaires, whatnot. Because the most bulk of venture capital funds are
Come from
mainly
these
from
guys.
government.
Oh, government.
In Malaysia, it's government.
But why wouldn't the private guys want to do it? Aren't they the bigger risk takers?
That's the thing. I think it goes back to the first one that I mentioned. The problem that he's trying to get them to understand, more educating awareness, because they want to see.
They think it's like gambling.
Yeah, they want to see return very short, and they want to see, because some, like you said, like I mentioned before, fund life probably up to 10 years. You can only see the DPI or distribution probably by then, right?
Yeah.
Sometimes you can do it earlier, right? But sometimes, and most of the time, is at the end of the fund life. Yeah. So they probably going to take that time. So that would be the greatest challenges for any of us right now is, and of course, high interest environment. Yeah. So it's not fun. So we have to keep pushing to see and to talk about the value of venture capital. Yeah.
I guess it's great that you guys are not leveraged in any ways. Otherwise, it would be very painful.
Exactly. It would be very painful.
Very painful.
Yeah.
Okay, maybe just the last question, right? How would you at the end of this fund, assuming it lasts all the way 10 years, because I think you notice that not every fund lasts for the amount that they want to last, right? 10 years, and those then many that do may not hit the targets that they want to hit. So for yourself, Artem Ventures is a relatively new venture, less than a year. How will you measure success at these different checkpoints? So I'll give you these 3 checkpoints, right? Year 1, year 5, and year 10. What will be your metrics of success?
I mean, in terms of fund performance, I think we the success, depending on how big is your portfolio, we want to see an increase in valuation of the company on year, right? So because it gives somewhat of potential in terms of the exits. So how much has the LP money been growing? That's one. Number 2, I think that would be the first year. The first year also includes how much money that we disperse. Yeah, it's a lot of people think that's an easy job, but it's not. Because you have to go through a lot of process and all this thing, and then you sign the agreement and you disperse, because the date that you disperse is the date that you need to catch up on, because it needs to happen that specific timeline that you wanted. Because beyond then, your IR, will be impacted as well. So if we target within the 2 years, we want to disperse just say 100% or whatever. Yeah, we need to catch up on that. So means in regards to us, we need to at least see more than 400 companies, at least.
Right? 400 companies to maybe invest in 20?
20.
Right?
Yeah.
5%. I get it, right? Yeah, 5%.
Around there, you probably, yeah. So we need to at least to see that, right? I mean, to see that meeting them or not, that's another question, but actually going through the process with us, So there's a lot of work. So I think the first 2 years, that will be the benchmark. I think subsequent years is how we value add, really helping the value add into the companies.
Market access,
fundraising and whatnot. So that's important part. And how many portfolios that manage to go beyond, how many companies that manage to fundraise, all these are very important. So that will be the mid year. I mean, the last year, I think for us, hopefully by the year 5 or below year 5 or year 4, we have another fund potentially that can help support these entrepreneurs as well. Probably the same one, probably different one, but the thesis is creating a follow-on fund for them, or so that would be another milestone to hit. Right. So VC business model is like that. I mean, you need to have funds to sustain. And number 1. Number 2, you need to have funds to help the companies that you invested before.
Right? In the case that they might need additional capital, right, going forward.
Yes, and at the same time, of course, if you're doing so well, why not you invest more?
Yeah.
Yeah.
But of course, hopefully they will allow you to invest more, right?
But you have your first dip ready. I mean, you already this thing, so your access to the deal will not be an issue. Hence the getting up to speed in terms of setting up a new fund is quite important for any VCs, especially want to follow through all the way.
You're averaging up, basically.
Yeah, averaging up.
Yeah. Okay, man. Thank you so much for coming. But before that, if people want to find you to give you some deals, or if maybe someone wants to work with or work for Artem, right, where can they find you?
You can find me on LinkedIn. My name is Tunku Omar Ashraf. Or you can email Artem, pitch, PITCH, at artem.vc. So you can email us there. So yeah, you can connect me to LinkedIn, or you can email us at pitch at artem.vc. Yeah.
All right. Thank you for coming on, Omar.
Thank you for having me.
And guys, for those listening, you heard the emails. So if you want to be part of the industry, or if you, who knows, maybe become an LP or whatever, you know where to go. And guys, if you are on YouTube, we also have Spotify. If you're on Spotify, well, you probably know that we have YouTube as well. So guys, thank you for staying all the way until the end of the podcast. I look forward to, finding more Omars for you guys in the near future.